Okay, somebody confirmed to me when we were live in YouTube. I think it's still loading. For some reason, it's pretty slow. Okay, thank you. We're live. Once again, good afternoon, traders. Welcome to the YouTube viewers. I hope you can use the link next time because then you will have a chance to actually ask questions. All right, so let's go. We're still getting very good views in YouTube. I think we've got about 5,000 the last time, and I hope you can help share this video some more. Right? It's a free, these videos are free. You can help to share them to anybody you want, and that would be great. So let's start. As usual, we would start with the account. Every week I'll be showing you this. Why am I doing this? Well, it's my way of helping you to clear up the market out there, right? People say there's a lot of scammers in trading, and they might be true about that. I believe there are. If you go to some sites, I'm not going to name the sites, but you know where traders are gathered, a lot of them, and you have top traders, you have traders that are super top traders and everything. All you have to do is ask these people, hey, I believe you're a pro trader. I do trust that you are a pro trader. We just want you to produce your account. We want you to show us, well, if you're a pro trader, what account you're trading as a pro, right? Is it a $1,000 account, a $5,000 account, $1 million account, a $500,000 account? So if you're a pro trader, we can judge how professional you are in terms of how much money you can make in trading, depending on what you do, right? What size of account you trade, how much people trust you in what you do, and how you're trading it. So you've all joined me when this account started from zero, and you will follow it as we go along. So let's go with where we were last week. Last week, if you remember, I'll always show you two things in the account that you need to keep track of. One is this. That's the cash available in the account. And two is the value of the account. That is where we are right now with the trades. So last week, this one was somewhere, I think, at 564. And this one was at 587, if you remember that, right? 587. So those trades were that I kept from last week is the silver and I think Aussie New Zealand. Only those two trades I have on long term. The rest of the trades you have, there are new trades you're actually looking at. So what happened to the other trades I had last week? I had the Pung CAD, and the Pung Swiss on. The Pung CAD and the Pung was closed for break even. The Pung Swiss was closed for a small loss. This sum, when I booked those trades last week, and I also closed one of the silver trades, and I reopened it. I'll show you where I did that. So when I closed the accounts I had last week, I ended up closing them for 576. So it was 587. But when I do close the trades, it was 576. Where you see 585 is some small trades that I made during the week, which you don't see because those were open and closed during the week. And that brought the account to 585. What you're seeing here is a drawdown on the trades I am in right now. So I have 1, 2, 3, 4, 5, 6 trades. Each one of them has separate drawdown. I'm not closing any of these trades because they're very long-term trades, right? So I will show you. Let's go one by one. Let's start with the main one, silver. Why am I still in silver? Where did I close it and what happened to it? So let's start with silver. So if you remember, last time I bought silver was here, right? This was where we bought silver. We were in a drawdown. And then silver went up here. So we were in about 20,000 profit, I think, somewhere at this level. So I didn't close it because I'm long-term in silver. So I'm not just closing silver just because you got some profit in it. That's not the point. So silver made a drawdown, pull back. And when it started to do this, I realized it's going to go. So I closed it somewhere there. I can't remember exactly how much, but somewhere around 8,000 out of the 20, which is okay for me. I know what I'm doing in terms of giving back all of that. Because if silver had done this, I would have beat myself up for closing silver rather than keeping it. So what I did was at the bottom here, I bought back, right? And then I closed back at the top here. That was a break-even trade, more or less, right? And I bought back when they came back here. So when they dropped here and came back, I bought back somewhere in here again, right? Somewhere above there, I think I bought. Somewhere at the top here, I think I bought back. This one. I actually closed it here, bought here, closed here, and then opened back there. What I'm looking for is when they're going to start the up move. And it started to go down. I could have closed and reopened in these one, but I thought this might just go from here. They dropped a little lower and they're back here. So silver is back at, I think, 1% drawdown, very small, not much, because the lot size in silver is very huge. It's 60,000, as you can see, but those are not standard. Those are in terms of how they, so it's only 4,000. This thing moves very fast. So at one time it was at, I think, 15,000 drawdown when it was at the bottom. This is almost close to break even. The price I bought is 86 and we are at 78. So it's just a couple cents away, right? It's about 6 to 8 cents away. It's not far from where the price should be. The volume you see there, 4,000, is nothing what you can make in silver. If silver does what I want it to do, we are talking about hundreds of thousands of dollars of profit. So what do I want silver to do? Let me go back and remind you, especially if you're new in here today, or if you'll be watching my video for the first time, we want silver to come back to the top here. This is the trade we're talking about. So if you're looking within here and you're seeing something like from here, for the last time from here to here was 20K, if it gets there, that's the profit we want. So you can see my plan in silver. It's a little different. That is why I'm not very anxious on closing silver. So what I think silver is going to do, I see this as a correction, and I think silver should break the top this week. Right? That is what I'm expecting silver to do this week. Go break the top. If silver breaks the top and break out of this, I'm keeping that lot size. If it breaks the top and start to consolidate, then we will go back again with the same process. I will close and I'll reopen. Every time, until we break out of this structure, I will close and reopen, because there is always a possibility that they'll retest the low and then go. Right? Structurally, we're looking for one pattern that could do that. That possibility is open. Until we actually get out of that structure where the possibility is no longer a valid possibility, that's when I'm going to stick with silver. I don't care what drawdown it goes, and I'll just leave it there. Because after that, it could pull back, go, pull back, go, pull back, go, but I don't care, because I don't think it's going to get any deep pullback. They'll probably get a few pullbacks like this, pullbacks like this, but then they're going to still go. So I will just use the opportunity to put more trades on rather than take off trades. But as long as we're in this structure, there's a possibility for one more down. Now, can silver go from where it is? Can it go down? Yes, that's possible. But because we are breaking out of this consolidation here, I don't think we're going to go down from here. I don't see that. If they're going to go down from here, I'll close somewhere here, probably for a $6,000, $8,000, and I'll buy back at a low again here if I see them going back up. Right? Could silver fall from there? I think that's rare. Not in the structure we have, not in the smaller structure we have right now, not in this smaller structure, but if they tag the top, they can fall. Right? So looking at the patterns we have, we make decisions, right? That's basically how you should trade. You should trade not based because what you like or how much money you have, or what is the structure doing? How you're managing your trades as you go along. You have to do this in a very professional way if you're going to do it. You have to do it based on your strategy and your understanding of the charts, right? It's very simple. You don't complicate your life. You look at what is happening in the charts and then you make those decisions. Is there a structural change? If there is, then yes, you change. If there isn't, then just leave it alone, right? That is for the silver, which is the other trade. The other trade was the, oh, sorry. Let me just remove this, see what happens there. Okay, it logged off. I have to log it on back. Let me just get it back on. And sorry, 1 second. And bring it back. Some reason they logged off. So the other trade that you're looking at is Swiss yen. Remember, I gave all of you as a gift to buy Swiss yen, right? And it's a long-term trade. The reason it's a long-term trade is that it's going to be going very much up. This is how much I expect it to go. So that little pullback there, we're only 2,000 and 560 something thousand, 500, $2,000, nothing. So I don't care about that drawdown. Now, is there a chance it could go deeper? Well, I don't see that possibility. We've already made a low here. Now, rarely they might go make a next low. That is rare, not in the structure I'm looking at. If they're going to go make a next low, they'll probably make a high first before they go. Structurally, this is how I expect this pattern to develop. This is a consolidation. They will probably go to the top, make a new impulse before they go down, if they will go down. Make a new low, but it's going to go up. So this will still go up. It doesn't, it doesn't matter how much they consolidate there, it still will go up. But can they make a more complex pattern? Absolutely. Here's a good example of how to know where it's going to go. See this? See how much time they did that? Where did it go? Down. Well, we got that and we're getting the opposite. Can they drop here again? Sure, they can do this and do that and do this and do this. Where they're going to go? Up. So what you do when you get in a trade based on your strategy, thinking this trade will go now, is you look at the pattern there to figure out, can it go now? And the pattern we saw says, yes, it can go. That doesn't mean it is going to go, because if the pattern gets more complex, comes here, go down, back, comes here, go down, you'll just relook at it and see what the bigger structure says. And every time you see a possibility for a buy, you take the buy. That's it. As a matter of fact, we might get a better buy from the low going up, but I hope it goes, because time is also a very important factor in trading. And if you're stuck in a trade for too long, then the only thing you lose is time. You really don't lose money if you know how to manage your trades. You only lose money when you close a trade, because that's what I told traders. If you hedge a trade, you lost the money because you've taken a buy and a loss, and that's it. You're out of the trade. So right now we're in a sideways move, and this is a long-term trade. So I will follow this very keen for you every week, and probably I'll send you updates on this. If there's somewhere to send you updates on it, I'll probably send you the updates so you will know when we are exiting trades like this, because this is a very good trade. I could see they're breaking this correction. It's a very small 1 hour correction. That's not convincing that they're going to go up as yet. This doesn't mean they're going to go up. It could mean they're going to go into long-term consolidation, but it's not going to go down very far from here. So if they go down a little more, no big deal. I'm expecting them to break the top first. And if they break the top, then we might look at a possible downside. By that time, you can put it in the profit, get taken out of the trade, and then get back in the trade at the lower place, right? You just have to manage the structures you see. Right now, I don't see a reason or a structure to close that. It's still going to go up. It's still an up trade, right? So I'm treating this as a long-term investment. Can I get in and out? Sure. If I think like structurally, if I see this correction as a correction, which will probably just make one high and then come back, retest the low before they go with a bigger correction, yeah, sure, we'll get out and we'll buy at the low here again, right? So that's not a problem. The third trade we're in is the Aussie New Zealand. That is a long-term one also. You know, we've been tracking that one. I think that one is just a couple thousand, 5,000 drawdown. That one was actually once in profit. Like this one was in a little profit before too, but you don't take those little profits. There wasn't enough to worry about it, right? So Aussie New Zealand, here we are in the Aussie New Zealand. It's a long-term trade. So where did I get in? Remember, I bought Aussie New Zealand once, right? I think I bought it here once and we closed the trade for positive somewhere. I can't say exactly where, to be honest. Somewhere we bought at the bottom here and we closed it for positive because it wasn't going. They dropped lower because we saw that correction there. They dropped lower, they went back. I think I didn't get to buy here because I was waiting for a breakout to buy, which didn't happen, and they dropped lower, and that was good. I bought somewhere in here. Why? Because we broke the low. I should have bought exactly the low, but I missed that point. It pulled back pretty fast. So I got in somewhere here. I think somewhere in that level. And then it fell lower. It was a little profit, but then it fell lower. I wouldn't take that. Even if it had been here, I wouldn't have taken the profit. I'd probably put it in break even, right? And I probably would have been taken out for break even, and I would have immediately bought here if that has happened, right? So that didn't happen. Do I think it can go down some more? Yes. Well, here's what you need to know. Watch the Aussie New Zealand, because there's a very good chance that this here might make a little flat and drop a little. Ignore that. If you're long-term, ignore that. You don't care about that. I don't care about that if they go, right? But there is a chance they're going to go back to the top here, somewhere in here. And we're going to come down here again before we go back. When they come here, you'll have to move into profit. Let it take you out. And then when it breaks the low, you buy again. So that is what I would do, right? I'm not making trade calls for anybody here. I'm showing you my account to tell you how I trade. Why do I think so? Because this correction is an incomplete correction. As I see it, there's a possibility that this correction is incomplete, which means there's a rare chance you look at this as all the correction and this is the end of the structure, but there is one more pattern with it, which I'm not going to discuss here, that might come here and then go, which would make this the bigger correction. From here is going to be the impulse, and just the correction would be only this part of it, right? So if I see that pattern developing, when they come to the top, we'll exit the trade. We'll look for a buy at the low, right? So that's what I will be looking. But the longer term trade for this is way to the top. This is this is a weekly trade. This is not even a long-term daily trade. This is a weekly trade. This is what we want. We want this trade. This is what I'm looking for. From here to the top here, at least to the top there, and maybe much higher. So what you're trying to do is get the best entry you can at that level. Because if you're taking the best entry here and you'd stayed with it, you'd have made a lot of money. Well, you can believe we did that there. That's exactly what we did at that level. We got the best entry, but the lot size at that time I was trading, I don't know, minis or something like that. I don't know. So that wasn't a big one. This should be big if this goes. What we're waiting for is to see. I don't think they will test the low. Remember when they were doing this, we said, watch it to come test the low and then go back up, right? Well, I don't think they should retest the low. There's no structural, nothing in the structure showing us that they should retest the low. What they're showing us is they're correcting that impulse. The first impulse they made to the upside is being corrected right now. So at some point, it's going to start to take off. And when this thing moves, they can really move fast. So you want to be in the trade, because I might not be there at some Asian session and wake up the next morning and it's 400 pips up. I don't want that to happen. It happened to me here once when I should have been in this trade with an entry order, but I didn't put it, right? So let's make sure you don't miss that trade to the upside. As a matter of fact, from the entry point to where am I, it's nothing, right? I entered here. And we are here, right? So it's not like you entered at the top here, you entered there. So that could even go to break even very fast. I hope this takes off, but it wouldn't. Very likely we're going to see one more low. That is for the Aussie New Zealand. Let's go Euro Yen. Euro Yen is a short-term trade. I probably should have closed that, but I messed with it a little twice. I had twice profit in it. It's not a long-term trade. I'll probably try to get out for break even. So what is the Euro Yen trade? I think you can see the pattern at the top there and you know what we're talking about. This one I thought would go from here. So I actually entered the trade somewhere here. I was in profit once. I was in profit twice when they came back, and now it's coming. It's like I said, you don't need to worry much about that trade because this is going to come back. I think I got in somewhere here. It's going to come back right back into profit. Why did I take that trade? Well, I wanted it to just break this top. I think it's a short-term trade that would do something like 1, 2, 3 break the top, but they retest the low. So you may be looking at a 1, 2, 3 here before they go, right? So I wouldn't be surprised if this goes a little lower, then go back up. That would not surprise me, but let's see if they go from here. Once they get above that top, I'll close the trade. Unless it goes really, really fast. Because this is not a long-term trade. We're in a structure that, once they break this top here, if it doesn't go really fast, they'll probably come back again lower. If it goes really fast, well, that could become a long-term trade. Where would the long-term trade be? I'm not expecting it to be a long-term trade now. But if it goes, the long-term trade is actually coming to break this top. If this goes, I don't think this one will go. I think they'll likely come here, maybe come back lower like this and then go. I'd make a deeper correction within that impulse. This would be the first impulse. Well, if I'm lucky and this turns out to be the one that goes, well, yeah, I wouldn't object to it. But structurally, I don't think that is what is going to happen. Right? So that was more of a short-term trade. It should come out for positive. Most likely, I think we'll get out for that for positive. On the Pound CAD and Pound USD, let's look at all the pound trades. So let's look at Pound Dollar. These ones that I'm looking at, we wouldn't redo them in the webinar because they're basically the same thing. So the pound trade I'm in from since last week is the same trade. I haven't closed it, and I missed the opportunity to close it where I wanted to. So I got into that trade at this level here. And remember when this was coming in, I told you it has to make another impulse to the upside. There was no need to worry about it, right? When I entered here, somewhere in here, and this one was coming down, and I said, well, you didn't need to worry about it. Right, because I entered in that breakout. You don't need to worry about it. I think somewhere here, actually, it's slightly because they moved it up. The amount of days you keep it, they moved it up slightly. So this was coming down like that. I'm looking for another impulse like that, which they made, right? So they made that impulse there, and that was my exit strategy. I missed it. When I came back, they were here. So what do? You can either close it immediately or wait for a pullback. I need a pullback. As you see, the pullback is right here. So the question is this going to drop now? I think it could. That's long term. If it's going to drop, I'll close it somewhere here. What do I need to close the trade? Let it make a move down. Let it make a flag up, and then I'll close it, and I'll be in the sell. Why would I keep it? Well, there's a chance they can make a bigger move to the top there. Come back here, make a bigger correction before they go because you have one impulse down, right? And that one impulse has enough reason to complete itself as a single impulse for a deeper correction. We're longer term downside and pump. So the buy is a short-term trade. That was a short-term trade that turned out not so bad. I thought they'll go immediately here and then come back. So that was the plan. Didn't work out well. See, short-term trades don't go well with me, right? Long-term trades are much better. So look at this. I'm here and this here. Okay, let me see what they do. I can close now, take a small loss, or I can wait to see whether this goes more or whether they turn. If they turn close, take that and go for the sell. The sell is a bigger trade and the sell will be all the way to the low. You remember we've been telling you about this running flat for a long while. And now we're looking for it to come and tag the low. So if this goes here slightly, I'll close for positive. If it comes back slightly, close for a loss and then look for that sell down. That is within the hourly. I'm on the daily now, right? So all of that will happen within the hourly. In the hourly, there's a long-term trade down. On the shorter time frame, they can make a bigger correction here and then go. So that bigger correction should give me positive or break even. Right, so this trade is not the best one. This one is one where you should have got out, but probably missed it. I should have probably even put an entry order to close it, which would have been the safer thing to do. So let's see. This one. The Pound CAD also not the Pound CAD I will keep. The Pound CAD is going to be a profitable trade. So I'm not worried about the Pound CAD. The Pound CAD actually is doing exactly what I expected to do, which is come back to the top there. And that means I'll make it a profitable trade, right? Because I think I got in somewhere here and expect this to make one more impulse. Did not make the impulse, started drop. Now we're looking for 1, 2, 3. This is pretty simple, right? Can this be a flat that they come back one more before they do that? Possible, right? This could probably come back here, one more, break the low, and then go back up. But they will make that. They will always make that. And here is proof that they will make that. Go back to my webinar and remember when the pound was coming down like this. When this piece was coming down, go back to all those webinars, these dates from here, there, go back, and I will see what I was telling you. They will make one back up to the top, because that is an incomplete pattern that is telling us, even if, although we're downside on it, they will have to make that one more impulse back to the top there before they go down. So if you take a copy of this and you bring it to the pound CAD, that's exactly what you're looking at. You're looking at one sharp impulse. This is long-term downside. This is long-term downside. Short-term, this should come back to that level I showed you there. This is going to complete the pattern before the downside starts. So let's go back to it and take a look. 4 hour. We're here. They have to go back there. They always do. If you were trading live with me, you would remember this one. When it did that, they have to come back into this level before they go. Well, why? Well, that is what they're telling you. Structurally, when they behave a certain way, they're telling you in advance what is going to happen. And that's why we do forecast. Forecast is based on what has already happened. It's telling you what is going to happen. So that one is very likely going to come. Now, could it be a extended running flat, which means this come here, go back here, do this, go back here, do this, go back here, do this, then do that, and then go? Those are the extended running flats. Possible. If I see that possibility, I'll just take the loss, take short-term sells, and then wait for it to come here before I sell. I don't see that possibility in this structure. And there's a reason for that, right? You look at the structure, you decide where you're wrong, where you're right in the structure, where the structure is going to do what you expect it to do. And if it does that, great. If you realize structure is not doing what you initially thought it's going to do based on your forecast, then you have to decide, how do you manage yourself out of that trade? And you want to manage yourself out for the least possible loss. That's it. It's so simple. Trading can be made simple if you have the knowledge. So let me repeat this again. It can be made simple. You don't have to panic. If you were in this account with me last week, most of you would panic, because the drawdown on this drawdown here was from 56 to 30. That was 530,000. That was where the drawdown was. Most people would panic and would start closing trades like they're crazy, right? I look at each one individual and said, don't worry, they're coming back. As a matter of fact, silver I will never close. For negative, I'll always close that for positive. If I have to wait a year, it's okay. Silver will go up. There's no question about that. Right? So it will go up. That's just that's something I absolutely know. That's not maybe. That's I know it's going to go back. So there's no silver trade that I'm closing for negative, except if it's a short trade for $2,000 because you want to buy it back much lower, right? That's the only. But that's not a negative. That's a break even for me. Right? So you understand how structure works, and then you wait to see whether they're doing what you want them to do. And if they did, great. You're back into the money. You're back making your trades again. So hopefully by next week, if you look at the progress, the way this one is going, you can remember when we started, when I showed you the first time, it was 560. And then we were in drawdown. The trades were in drawdown. We were at 547. Then the next time it was 564, and then we were in drawdown. Those are not the trade we want. We wanted to make leaps, right? Then we closed 570 something, and now it's 585. So as long as the progress of this keeps going up, as long as that keeps going up, I'm happy. All these drawdowns I need to manage to make sure that this does not go down, that this keeps going up all the time, right? You can be in drawdown. You just have to make sure those drawdowns don't bring you down and leave you there. If they make a drawdown and go back up, that's what you want. So drawdowns in trades are not a problem. If you look at every time I show you the account, it's only once it wasn't in drawdown. Every time I show you, it was in drawdown, right? So there is not a problem. It's how you manage those trades out, right? And then you keep making new trades that will build the account. So your account growth has to be positive all the time, right? You have to make sure you're getting positive growth all the time. And even the drawdown, you're in money, right? The drawdown is within your profit. So then you know how you trade. Are you going to get drawdown? Absolutely. If you're not getting drawdown, you're not trading. It's that simple. If you don't have drawdown in your trades, you're not trading. If you're trading a $500 account and you're worried about drawdown, you probably shouldn't trade too, right? So it's very simple. So for all of you, this is why we want to share it. We're changing. What we are changing is that the way you should accept traders now, the way what you should demand from any trader who is on YouTube, who is on some big site where there are hundreds and thousands and maybe more traders, maybe millions of traders looking at them. And if they're saying to you that, hey, look, I'm the #1 trader, I'm a top trader, I'm a great trader, I'm a thing, or I'm selling you signals, or I'm selling you courses, well, please Show us what you do and how you do. I've been showing you how I do for 3 years, and now I show you, live how I do it. So that is the new demand. That's how we should, if we keep doing this, then we will filter a lot of scammers out of the market, right? It's very simple. A lot of people write on my charts, and one of the questions one person wrote is that, guys, you should ignore these guys. They're just selling courses. And I want to address that question before we start, because he might be perfectly correct. Most people who are actually posting charts are actually selling courses. So why would someone want to sell you a course? That's a good question, right? Why would anybody want to sell you courses? In the first place, I never really start by saying I want to sell courses. I don't really sell courses. I train traders to trade. That's a whole different strategy. But let's just address that question. If you want to be trained, let's say you don't know anything good, right? It doesn't matter what you're going to do, right? Right? It doesn't matter what you are going to do in your life. You want to be trained to do that. You want to be trained to be a lawyer, to be a doctor, to be I don't know, what else people, a teacher. You want to be trained, right? Who would you like to train you? That's your question. The guy who cannot do the work, or the guy who has no proof that he can do the work, or the guy who actually knows what he's doing, show you his methodology of what he's doing, and then show you how he used that methodology to trade himself. It's very simple. Those are the questions you would have to ask yourself. I'm never telling people you have to buy my course. That's like rarely I said you have to buy my course. People get refused from buying my course because they haven't reached the quality to be there, right? If you don't have 1 year experience, I will tell you wait for a year. If you don't have capital to trade, and there are people in here who would know that, who don't have the capital and have wrote me, and I said, well, sorry, I don't think you should be trading live yet. You don't have the capital to do that. One guy said, I'm going to borrow money to do that. I said, you don't even think about it. You should never borrow money to trade. You should never borrow money to buy any courses. It's that simple. You should never do it. It's just not the way to go. You're going to lose everything, and then you're going to dig yourself a very deep hole. So this is what you need to do. We can all save the industry. We can all make sure that we are putting people in the right place, in the right line to do it. By doing this, when you go to a webinar, you demand that they do that. When you go to a site where you know, most of you know where I'm remanding, what I'm talking about, when people are going to say, hey, I'm a top trader. Hey, wow, how about you show us what you do live? Not in a demo $1,000 account, but in a live $500,000 account, right? So we're making new demands. I can imagine the people how they're going to get upset with me, and a lot of them will come into this video to make their comments, their disapproval of what I said, but that's the demand we need to make from them. You need to make that demand from them so that we can rid the world of all the scammers, at least in trading, right? Not all, but most of them will run away, right? So let's go. Pips is useless. Pips counting is not trading. You can't go buy anything with pips. It's that simple, right? I can make pips. I can make 1 million pips for you in a day. It just wouldn't be money, right? You take a 0.01 lot size in my account and you put on trades like crazy, and the chart only has to move, I don't know, 10 pips, and I will count 100,000 pips if I can put enough trades on, right? So you can make 1,000% of pips, but the money-wise, I'll probably make $100 or $500 or $1,000. I can't give my investors pips. They don't care a damn about the pips. And my investors will just kick me straight out of the thing if I start telling them about pips. Most of them don't even know what pips is. Show me the money. It's very simple. Show me the money. Don't tell me how much pips you made. Show me your money, how much money you made as a professional trader. Because if you're making pips, I don't give a damn about it. Let's go. Dollar index. Dollar index, I told you last week, once we see this structure here, we started thinking that there is a possibility they're going to pull back because these are not enough to complete. So we broke the top here. I don't see this as a correction. I think that's part of an impulse. So we might end up with a much longer term thing here. We'll probably even retest the low before we go. As long as we're in here, it's going to be very much of a sideways move. So I still think I wouldn't be surprised if this comes back somewhere. This week, if you get a flag here, look for sell. Watch this pattern. If it breaks the top, buy one short-term trade, take profit. If they make a flag here, sell one short-term trade, take profit, right? So all trades this week would likely be short terms. Every single thing would likely be short term. Same here. We're probably looking at a flat, come below that low, sell, take profit. It's one trade because they will have to make one more sharp move up like that. If this is the one going, wait for a flag, buy one trade, take profit. It means every time you get a flag, buy one, take profit. It's short-term upside, short-term downside. As a matter of fact, I think this, if you ask me my forecast on how I think this could develop, I would see this doing that, doing this, coming back down here, going back up, testing the top, and then go down. Now that's very complicated if you have no idea what I'm talking about, right? That could be very complicated for you. So we're not going to go that far. I'm going to give you what's the trade for next week. You get a flag here, buy, they drop below this here, you can sell it. That's one. One impulse, one profit, take it off and wait for the next trade. If you get a next trade within the week. Pong, the same thing. I do think Pong is going to break this top, not because I'm in the buy, but because I'm looking at this structure. If that was all the correction, they would have dropped, right? And because we've got 1, 2, 3 here and they're now going down, there's a likely chance you get a flag here and you get one more impulse up, but then the big trade is downside. That would be one more impulse up. If they're going to come down from here, this is just a pullback. They might just come down very slow, go back to the top there and then drop. You'll get another correction there, right? That is also possible. So if you're going to get any sell setup on the 1 hour, if you get a sell setup, that means you're looking for a very long, you're looking for an impulse here in the 1 hour, you're looking for a flag here, and then like this, something like that, you'll get one sell, take the profit, right? One sell, upside, one buy. So everything is in correction, which means you get one single trade, take profit, and wait for the bigger structure to turn. As you can see, we've probably completed a pattern here. This could come back like that. This would be your correction and drop. So if you get a flag here, an impulse and a flag, sell, right? If you sell, if you get an impulse, a flag, and you sell and they don't break this structure at the low here, stop here, put it to break even, you're going to get a buy above the top. Is the correction over? Not necessarily. But very likely you could get either way. So either way, as long as you're in a correction, either way is possible. Which means you get one trade only next week, either a buy or a sell in this. Now, it's not, it's going to go up or it's going to go down. Just for the few trolls who will be coming on, if you don't understand English language, which might be a, might be a point, your English language is not your first language. I'm not very good at English language either. Please listen, let me explain it once again to you. It's not, it's going to go up or it's going to go down. Is if you get an impulse and a correction, then you sell. Okay, I hope that's settled in with the trolls. If it corrects here rather than do that, but make a bigger correction here, then you buy. Now, if you don't know what a correction is or an impulse and a flag, well, sorry, you shouldn't be trading because you will lose your account. So don't just go in the chart and write stupidness, because you're just telling us you're stupid. And I've had enough of that. So just walk away and leave the chart alone. Just don't watch the webinar. Here's the thing. If you're watching my webinar every week and you don't like what I do, I'm wondering, how sick are you? That's the only question I ask when I see these guys. How sick are you to watch something every week that you don't like, that you're not getting value from? If any one of you watching this webinar is not getting any value from it, you just have to stop watching. It's that simple, right? Unless you're very, very sick. So let's go. I don't like when they write that. That's why I'm saying it. So watch for the impulse. You get a flag, take this trade down, put it to break even. If it goes through the bottom, congratulations. You've completed this and you're going for a big there. I think that is what it's going to do. We're looking at that possibility. But we have learned that sometimes they just do this, do that, do this, do that, and then do one more up. We've learned that that is a possibility. And they could stay here for a while before they go down. And if they do that, we're still, like you see this one, you thought it ended there, right? And then it came down more. You thought that was going to go, and then it came down one more. They still go, right? That's still a correction. It just becomes as a bigger correction. This is still, this could be the end of the correction as it stands right here, right? That is 1, 2, 3. Go back up, right? This could come down here and then go back up and repeat the same thing they did there before. The same thing. Go back up. This could come down and repeat exactly that. So it's not always over when you think it's over. Just be aware of how you're going to trade when you're in the correction. New Zealand, Same thing. Expect this to come here, maybe one more high and then downside. We're still looking for this to probably be that is not a complete pattern. There'll probably come one more here, go back, break the top, and then we'll see whether they're ready for the downside. I don't think it's going to be total upside. Very likely we're expecting this structure to come back, retest the low before they go. Let's see. Yen, I already told you what we're looking for in yen. More upside, right? So what are we getting here? I think we're getting a correction. You could likely look at this as a possibility to come here, maybe come back here, go back up there, give you a bigger correction, one more drop, and then up. So go back to the 1 hour and the 4 hour. What we're doing is making a correction. I don't think we're going down totally. I think we're making some kind of a bigger correction here. So I'll expect this to probably do this, come back something like that, drop here, go. So we're going to get a bigger correction here. And then we're going to take off. So it's most likely you might not get a good trade on the yen. Can the yen go down totally? I don't see that because in the big structure, we're heading for the upside. I think it's pretty clear that on the big structure, we're trying to come back at least at this level, and we're going to break that level. So we're trying to get back there, but there's a good chance we're even going to break that level, right? So I think it's more upside, but a consolidation there is what I'm expecting. This more upside, but they're consolidating, which is good. You want to see this consolidation in here, right? Because that consolidation will give you your next impulse. So every time they make a consolidation like that, you're looking for your next impulse. So when they made this consolidation, you got that impulse. They made this consolidation, you got that impulse. Then they make a bigger consolidation and you get an impulse here and then a smaller consolidation, another impulse until they break the very big top, which is this one. I should put this. I think we're going to see this come break the top and then we will start the downside, right? So always look at it that way. Pound CAD, sorry, dollar CAD. Did I say pound CAD? Dollar CAD. Dollar CAD broke out. So we're expecting it to go up some more. We're expecting this structure to go up more, probably break the top. This piece is given a 1, 2, 3. This, I think we might be in a consolidation here, so we could come up here. If they go very slow, which means you expect one more down and then the upside. I think we might get a bigger consolidation here, and then we'll come back to see what the whole pattern is, because this thing has got a very complicated pattern going up there. We've seen that pattern in the pound before, and what we end up with is a very complex, smaller level corrections within each other, right? And the whole thing is just one big correction. So where do we expect this to go? I think we can see them either retest this top, but based on how this is going, I don't think that is likely. I think we will come here. That will be a bigger correction, and we might make another 1, 2, 3 to the downside. Like you made 1, 2, 3 there with a bigger correction here and another 1, 2, 3 here. Well, after that, we could probably head to the upside. I think after that, we'll probably head to the upside. So it's more of a bigger correction in play right now. Upside more, short term, definitely. So on the short term, if this decide to go up more, you're going to get a break. You will have to wait for it to break out before you buy, right? If this breaks, if they don't break this low and take off to the upside, you buy. Buy above when they break out. You look for a flag and then you look for your buy. If it drops below the low and you don't get a buy, still wait for an impulse and a buy. This would be one of those complex P-wave structures you normally see, right? I don't think it's total downside whereby they retest the low. We will know that in the middle of the week. We don't have enough information for that, and I will not make that call until we have enough information for that, right? Silver, you know what to do. I don't even have to tell you what to do there. Gold, somebody wants more time in gold. I still think gold is going to come back one more. Be careful here. We wanted it to come and attack this area and then come back, right? But it went a little higher. That doesn't change the structure. Structurally, they'll still come back here, right? Because what you're getting in gold is this. You have a 1, you have a 2, you have a 3. It can go above. It could even come above this one. It doesn't matter. They could go there. But then if it goes above that, the information that they're giving us is different from what you have here. I still expect it to come back one more and then go, right? Now, how low it's going to come, it depends on how high this goes and how it develops structurally. We're looking at this as a 1, 2, 3 structure. 1, 2, 3, and then go back up. So gold very likely could go down more. That doesn't mean you get out of your gold because you're buying. As one guy said, I sold my pound CAD because he said it's going to go back up. If you did that, you should stop trading. If you're making your decisions, your trading decisions based on what you hear me say, You should stop trading because you are not hearing what I'm saying, right? And you should even stop listening because you're not hearing. I'm not telling you what to do to trade. I'm giving you a sense of direction. I'm explaining to you how the patterns that I see are going to develop. Those are not trade calls, and those are not giving you any calls to take or make or close or open a trade. It's only how I see patterns and how they're going to develop. So this is what I see. I see a 1, 2, 3. I see a 1, 2. I still expect the 3. 99.9%, I'm right about that happening. And I've proven that many times. How do you trade that? Oh, well, then you have to, that's a whole different story. You have to learn to do that. That's the problem. I'm not telling you to start selling because it's going to go down. When and how do you get into that trade? Ask my traders. They can tell you. They know how to do that because they've been trained to do that. That's what I train them to do. That's not what I'm telling you to do here, but that's what I train you to. So that's a whole different story. You don't have to buy or sell because I said it. So if you did that, stop trading. If you did either of the two, you listen to me and you make a trade, just because I said that, you should stop trading. You don't know anything about trading. If you close your trade or open your trade because I said something, you should stop trading because you have no idea what you're doing. When you have the knowledge of trading, then you will make your decision based on what I said. And then you would say, okay, let me see if what he says is going to happen. And if it happens, what is my strategy to go in? So if you're using those tools, let's see if he's correct about a pattern. And if he's correct about a pattern, what will be my strategy to enter? Then you take a trade or then you don't take a trade. If you don't have that, well, then just stop trading live. You lose your account. It's that simple, right? I don't take a trade in that. If I'm going to sell this, it has to start proving that I'm correct. I have to wait for the turn. I have to wait for the setup. And when I get the setup and my strategy say you can sell now, that's when I sell. And when I sell, I have to know where I'm going to exit if I'm wrong about the sell, as well as I have to know, okay, where you're going to close the trade in profit if it goes your way. So the plan is to close it under the low, as you can see. That doesn't mean this thing doesn't come here and then go back up. It also doesn't mean that it stopped here and go back up. So how would you know which one of those are correct? Well, it depends on how it's going to develop. And that's future. There is no way to tell what the future is going to give you, right? There's a way to forecast what you think the future will do. And then you wait to see if it's going to do that. Like I said again, 90% of the time, these forecasts are accurate. You can go check them. Don't depend on me. Go check them. I see one troll keep saying he's 50-50. Don't worry that craziness. He could say that as much as he wants. He's probably selling signals. It's not 50-50. You can go back and check all the charts I show you. If you have the patience and the time to do that, go do it. There's no 50-50 in this analysis. If it was 50-50, I wouldn't be making money, and none of my traders would be making. And you can look at the results my traders are making. It's amazing. Let's go. Euros. If you get sell, take the sell, take the sell. This is telling us at some point, if you get another sell, take the sell. At some point, you'll probably make one more up. I'm looking at this to make a 1, 2, 3. We already have one here, but I don't think that's a complete pattern. Right? So like we said from there, take any sell you get and move into profit and take off the profit. It is likely that you will start to get a buy. One more retest. We're going down. The big picture is we're going to go down, but we have to correct this up move here. Sorry, we have to correct that down move. So I wouldn't be surprised if this goes back up one more here, and then we get the downside. Right? So at some point, this might turn out to be just one impulse up. I don't think this has part to be with it. If that is the case, you will get a sell setup again. Take the sell setup. If that is the case, you get another sell here. Take the sell. You get another sell. Take the sell. You get another sell. Take the sell. They can do that, do this, and then go down. So look for sell setups. Take the sells. Move your stops. If it starts to go up, we'll get the buy. We don't have a buy setup as yet. You're in New Zealand, same structure. It will go back up. It doesn't matter that they're dropping. They will go back up. Right? This one is going to happen. We can bring it like this now. If they break the low, it will still go back up. We will have a running flat. Right? This is going to go back up. If it comes here and it does that and it comes here and do that, it will still do this and go because now we're going to have a running flat. I just showed you 2 of them today that did that. Took weeks to do it, but did it. So what would be your strategy? Every time you get a sell, you take the sell, as long as you're going down, right? If this turns here and give me a buy setup, I am in that trade. Every time you get a buy from the low, you take it, a buy setup. based on your strategy. Every time you get a sell setup from the top, you will take it. So if it only comes to here and they turn and give you a sell setup, take that trade to the downside. Stop here, give you a buy setup, take it. One of this will go like that. And that will make you money. It's not the short-term ones that will make you money. The short-term ones are break even. If I show you how many short-term trades I take last week, you wouldn't believe. I think it was close to about 20 or 30 short-term trades. Most of them are close to $500, $300 for. Those are not even, those are break-even trades. I don't even count them. But how many attempts did I make for long-term trades that didn't work out? A lot. If you look at my weekly record, there was a lot of trades. They just didn't go. A few of them give me $1,000. How do you think we moved from 7 to something to 85? It's because of the short-term trades that didn't go. So that money you look at is not money that are made because of good trading. That money is made of break-even trading, right? There was a single trade that went how I wanted to go last week, right? Because I'm always looking for long-term trades, and I will make a number of attempts before those trades go, right? A few of them, when did the profit turn back? I closed them. A few of them got closed themselves break-even. There may be a few losses, $100, $500 losses. Those are, they balanced out at the profit from 7 to something to 8 to something. Right? So those are not the ones that will grow my account. When the ones that I want to grow my account start to move, the account is going to move really, really fast. You're going to get 5-6% increase within the week. You're going to get sometimes 10% increase today. That means the long-term trades have moved. Right? Sometimes you don't get them to go. You make 6 attempts. Remember, I bought this. This was a break-even trade for me. I bought this. It turned out break-even. It didn't go. I was trying to get this one. Right? I'll try to buy it again this week. Maybe it's another break-even trade for me. Right? It's going to happen, and eventually then one moves, and then you get it. Right? So you will get that sometime if you're trading intensively. Same here. It's going to go down, but you'll have to correct. I don't think that's a running flat. If that is a running flat in there, wait for a deep correction sideways. Wait for a sideways correction to prove that that is a running flat. There's a good chance they'll come back here, then go. Right? On the 1 hour, don't trade the 1 hour flags. If this comes back up, that would be great. You see this one here, if this comes back up like this and then start to fall, you can start selling because that will complete that this was the correction, right? This was the correction in here. This was the end of the impulse. That is your next correction and we're going down, right? So that is what, you can look for long-term trades to the downside. Don't try to buy this. Short-term upside is not good. Euro Swiss, I think they'll tag the top now. It looks very much like they will go tag the top. They didn't tag it this time, but there's a good chance they will go here, tag the top, and then go down. This is a big trade to the downside. We're in a big daily correction. I think you can all see it. We're in a big daily correction. There's no question about where this is going to go, right? We were going up, and we were going up, and we were going up, and we were going because we came down. And then they broke, and they're consolidating in this zone here. So the next drop should be like that. And if it's very good, it's going to be like this. Break that low. So if you get any trade set up from the top there, you start selling. If you get any trade selling from the top there, you start selling. The Euro Swiss has this. The Pound Swiss has this. See that? The Pound Swiss has the long-term trade. And you had this impulse. You get that correction. You got a drop. They pull back. They make a drop. This could go up one more. And then we will start to look for the downside. I don't think it's going to break the top. You might get one more correction there, just like the Euro Swiss has one more upside. All right, I think the Euro Swiss, this is going to go back up, tag the top here, maybe even break that top. This here, we should come here, tag the top, maybe break the top, and then downside. So short term, right now, you're looking for, if you get the upside, you can take it. If this breaks to the upside, you can go for that trade, make an attempt. Doesn't mean it's going to go, but if it goes there, at least it's going to be a break-even trade. Like if they come here and they stop to go down, you can put it to break-even, and then you look for the sell from here going down. All right? So which one you're going to get, I don't know. I have no idea. I'll get my crystal ball, and then I'll tell you that. But I would trade it both ways because I would be looking for setups to trade it both ways. First to the upside and then to the downside. Euro Yen. I'm already in this one. You know what I'm looking for. Tag the top and then turn. If it tags the top and continue to go, I got a bonus that I wasn't expecting. Long term is upside, but I don't think this is the move. This is all the correction for the upside. If that turns out to be all the correction for upside, hey, I'm good. I'm very happy with that. Right? I don't think so. I will know that when they break the top. There'll be things I'll be looking for when they break there that will tell me, oh, you know what? You might probably stay in it. It's going to continue to go or get the hell out of it. It depends on how this goes up, when it goes up. It's not necessarily going to go up from here. Like I said, watch this to make a probably running flat, drop a little lower. That is exactly what the yen did. and then go back. What you're looking at there is the yen that did that to us. We thought this was the running flat. Turns out they made a move up, like this one made a move up. They dropped, they made another flat here. You could see this here probably. See that there? They made another flat in that one, and then they drop here. So you end up with a flat there, 1, 2, 3. We could end up with a very similar structure like that. Come here, drop lower, and then come back, right? So if you're aware of that, then you don't panic. You understand what it's doing, and then you just say, okay, I'll make a decision. I'll either take off the trade for break even and then buy it lower. I'll just stay with it, let it go back down and come back up. I can handle that risk, right? Those are the decisions you made based on the knowledge you have. I hope you did. I hope you're not missing that part, based on the knowledge you have. Because if you don't have the knowledge, the only thing you will make that decision is your emotion. And that's what most traders do. They don't have the knowledge, so they make decisions on their emotion. Oh my God, I like this. Oh my God, it's going up. Oh my God, it's coming down, right? That's the kind of decision they will make on their emotions, which is not good. Europan broke the top again, coming down now. So maybe that is all that's all the correction. We're still expecting it to go down. We don't know that that is all the correction, but if that is all the correction, great. Wait for your correction here now and go for that trade. What are the chances Pong is the one that will make the spike up to give you this? Let's see, right? So watch this. This is still downside. There's no question of where this is going to go. It's just going up slowly right now. So we can take this off because the correction turned out to be this one. Well, we saw that this one. I was in that sell, close for break even, went up. I'm looking for a next sell. As soon as they break out of this structure and make a correction here, I'm selling. Why? Because we were expecting this move. We expected it from here. It didn't happen. I'm expecting it from here. Let it make a correction up first, and then we start selling. Right? Let's see that. Pound Swiss. Short-term upside, long-term downside. I showed you this already, right? Short-term, I still think they will come and break out here, and then we'll be looking for that. How far they go when they break that up is anybody's guess, right? I don't think it's going to go very far. From my experience, they barely break the top and then they turn, because the bigger picture for this thing is downside. I showed you that in the daily already, right? Let's see. Pang Yen. Upside. Remember I told you this is the only one that had enough structure. Now they've all kind of like structurally set in the right there. This is going to go up. So if you get a buy there, if you get a buy here, take the trade. You want the flag first, or you want the correction or something here, and go for that trade. Pangos. We got a sharp one, so expect another sharp one. And then look for downside. See, when you have a sharp move against a sharp move, they can go, but they will come back very sharp. Give you a running flat. Will this come here, and then go back up there and do that? Possibility, yes. Do we expect it to happen? I don't know. So what you're going to do is, if you get a drop below this here, you sell. You sell for this, take profit. It will go back up, drop again, sell, take profit, drop again, sell, take profit. When they make the sharp move, if you get the buy, if you're lucky and you understand it and you got the buy, take the buy and then look for the sell. It's easier said than done. You see how easy I try? Try to do it. Without the, the right knowledge, you try to do that. You'll probably get a lot of losses before it happens. I think they'll probably go back. We might be making a bigger flat here, or this could be the point of reversal for the sharp move. Watch for that sharp move. You're getting something like a flag here. So if we get a trade here, I'll probably take it. This was an entry order. Ignore that. It's not valid. It was valid if they were going to go up before they drop there. Watch for a possibility. If you get a flag here, that would be a good trade to take. But if they break down, you can go for the sell. It's going to be short term. Every sell is very short term. And as they come close to the low, the sell becomes more dangerous to you, because it's either going to be a running flat or a regular flat, and you don't know which it's going to be. Short term up, long term down, all of them, right? So you've got a sharp move here. I think we'll probably get another sharp move here and then downside. If they're going to continue to go down, sell below that low. Don't sell. If you sell within that low or above the low, you're going to take a loss. Something that shouldn't happen, right? If you get a flag here, go for the buy. I think they're making a flag here right now. You're kind of getting some correction there. If they stay within that as a corrective structure, you can go for the buy to the top. Let's see. Yep, you can see this one here. For example, you would have seen this flag here. See that flag there? That was your buy setup. You probably got a second one here, but you can ignore the second one. You go with the first one. Let's go. Pankad. Pretty much I explained this already, and you're getting a flag here. So if this flags break, that's a good buy. When it comes to the top here, you'll have to be very, very careful because at that point they may turn, right? New Zealand yen. I think we will come back down. We are going up, but I think we'll come back down first because this is a sharp move. This is a sharp move. You'll probably get some more consolidation and not a couple sharp moves before you go, right? See this, right? This is likely going to go sideways before it goes. So watch that trade. This is going up, but it's consolidating now. Before they go up, they will make an impulse and consolidate. We have got an impulse, and we are consolidating right now. So when you have this impulse here, see that impulse there? They consolidated in here for a while, and then they took off. I don't think we're going to get such a big consolidation in here, but you'll get something, and then you're going to look for that trade. You might not get a trade set up here for a while. Right? You might not get a good trade set up, but then you will get a really good trade to the upside. So that might take about a couple of weeks before you go. You can go back and see, you know, see this one was a pretty huge one before they go. So we'll see how long this takes. We're going to be here, and we'll probably trade it up and down. You can trade within this consolidation if you have the skills level to do that. CAD yen, same here. We're consolidating. I think this consolidation is going to have more correction before they go, right? We're making a bigger, these were small corrections. We're making a bigger correction, right? So they make some small one, a bigger one, and then even a bigger one here before they drop. The same thing you're going to get on the upside. So Swiss yen is the same thing. Swiss yen I already showed you guys. Same thing. I think there's a smaller one here before they take off, and the same you would have on the Aussie yen, right? Aussie yen is now in the consolidation. I can see this coming back here, maybe even stay in there, come back here, go back, right? This is the simple form. I don't think they're going to be that simple, but if they make it that simple, you'll get a good trade, right? So you can look for that. Aussie Swiss. We're consolidating in here. They'll probably do this, drop one more, and then go. You're looking for this pattern, right? And then we'll go. Short-term trade is downside. So you're going to look for short-term sells. I'll change this from here to here. You're going to expect this to probably go back up some more. You might get a little up above there. There's a good chance we'll come one more down, and then we'll go up. So if you get sell set up from the top, you can take it. There's not a buy set up there. All trades are short-terms, all because you're in consolidation. So when they're consolidating, you're not going anywhere very far. Aussie New Zealand, we're consolidating also. Same I said, we'll probably go back up somewhere here and then come back down and then go. You can look for a buy setup there if you get it. It's short-term buy setup. All the setups are very, very short-term. So if you're going to take any trade in a consolidation, you have to know that it's not going to go very far or for very long. Aussie CAD, same thing. This one, actually, if you get a sell now, you could start to look for that sell because you can see the consolidation there already. So if you get a sell, that'd be okay. Aussie New Zealand CAD, that was the Aussie CAD, sorry, right? New Zealand CAD, this you're looking for a sell setup also. I think I showed you this last week where we think this is going to come back one more and then look for the drop, right? Because the correction is almost over. Look for a sell setup. You don't, this might, so wait for this to drop and give you a flag. I don't think you want to sell it at that level. There isn't enough reasons to do that. But if you make that, then we'll probably look for one more move down. That is one more move like this. Break the low. 1, 2, 3, and then we will see if they're going to go up, right? So you get a nice trade from there to there this week. It's already at the top. It should come down now, right? New Zealand Swiss, similar structure. You're actually in this big consolidation. Let's put it in a daily. I think this should come down. I don't know if that is all the downside, right? We were expecting it to break the low, but they only came here. I still think there's a chance they might come back here. We're not going for buys until we break out of that structure. Right? And we got to break out convincingly, make a correction, and then you're going to go. So you don't want to buy it at that level at the top there. It's not worth the buy. If you get a sell setup from there, then that makes sense. If you get a sell setup to come down, that would make sense too. Maybe for even a short-term trade, even if they come to this level first. Right? Put it to break even and then see whether this will be a continuation pattern for upside or whether they're going to come retest the low and then go. It's still upside, right? The question is whether this is the low. I don't think that is the low. it's too short, and it's normally it's not very good when they're so short. You still expect them to drop beyond the correction low and then go. CAD Swiss, let's say it's not necessarily it's going to drop there, but that is not the right, that's not the safest pattern to trade, because very often you can get in the buy and then they end up going down low to test the low before they come back up. You're getting some consolidation here. You might get one more trade up. Short term, nothing. Stay away from that trade. Copper came up. They might retest the top. I guess we dropped here. This trade was actually from there to there, and then they went back up. So they might retest the top, but then they're coming down, right? Even if they retest the top, we're still looking at that big sideways move. So even if that goes and retests the top there, ignore the buy and then look for the sell. I don't look for the buy in the copper. Let this go and test the top if they want to. Then look for that trade to the downside, because you've got 1, 2, 3, and you're going to look for downside. So the sell is the longer term trade. Natural gas, you might get that sharp move there now. It looks like it might happen. We're looking for that sharp wave before we start looking for sells. You might get a buy setup here. It comes to this level and stop to go down, you can sell below there. If they come back to this level, then you start to look for sell. That will complete this running flat. Right? So right now, I think you're looking for short-term buys, which you have. Right? You're already having a short-term buy there. Watch it if it becomes a flat here. Right? Then you'll get a break-even trade. Right? Sorry, that was the US. We were in the natural gas. Let's go to US oil. Okay. It broke the top. Now you got to be careful. So what we're saying is that you can trade this up until it breaks the top from here, right? When it breaks the top, be careful, because this is only the first impulse of correction of the bigger daily down move. You would have to make a correction down and then the next impulse up. Every trade you take from here now becomes very dangerous to the upside. As soon as you get a sell setup, would be a really, really good one, right? This one broke the top too, so let me show you this. And then now you got to be careful. Every trade you get buy setup, you can take the trade, but you have to be very, very careful with it, because we're actually correcting this. See? So we don't know how high it's going to go before they start to drop again. So every trade you take here now becomes higher risk. You can take it if you get a setup. So you get a 1 hour flag, you buy, you move your stop in the break even, and then you take profit. Because every trade until the pattern is complete, you know, once they made this tree, we have to go up. Anytime they can turn. S&P 500, well, it's still going up as we expected. So you had a number of buy setups that I showed you there, and they'll probably break the top. I still expect them to break the top, well, because we've completed the correction, right? So because we've completed this correction, it's still going up, and it will probably get here. Like we said, it's a correction. I showed you the corrections here, I showed you the correction there, and I showed you the correction here. So where is the fella who says, hey, he said it's going to go up, look, it's falling. Well, you remember when it was here, we said, watch it, it might go up from here, because we were looking for a running flat, right? Knowing patterns, you see a running flat, you would make the assumption, hey, the running flat, it should go up from there, right? So you're thinking, oh my God, it dropped here. The guy said, oh, this guy's crazy. He said it's going to go up. Look, it's falling. Okay, he has no idea there's an expanding flat that exists, right? It became an expanding flat, and then it goes up. Very simple. Like I said, when you have the knowledge, you don't freak out on things like that. You just understood what happened, right? And then he said, okay, if it does that, then great. It's an expanding flat. Let's go up now. Could it become something more complicated than a simple running or simple expanding flat? Absolutely. Right? We don't have enough information to make that forecast as yet. Our forecast is based on a very simple expanding flat. We will see what happens when it starts to develop, but it's still a correction. Anything it does now without breaking that top will still be a correction. That's upside. It's going slow, but it's going to go. So I think this is going to go very much. Is this the end of the structure? We don't know. We still think this is a running flat. And if we get buy setups, we will take them. Every single buy setup you get, you should take it if you understand structure. If it turns out that it's not going to go to the top, but it's going to come here and then retest the low and then go back up and make an expanding flat, you don't freak out. You get a break even on that trade, or you take a small loss on that trade, and then you look for the buy to the upside again. Could this repeat what the S&P 500 did? Probably. I don't expect them to do that. So you go for the buy here. Go for the buy just above the top. Some of my traders are already in that buy, but you can go for the buy above this top. And then when it goes there, it comes to this level, but at a break even, it's going to either continue to go or it's going to come back like that. Right? If it's going to make an expanding flat. I don't expect to see an expanding flat. We don't make forecasts for something that you don't have enough proof that that is what it's going to do. Right? You make forecasts based on what you have right now. So let's go. Nifty, for those who trade Nifty. Nifty is just being so nice, right? So Nifty, we were expecting to go back up now and then look for the downside. Every single one of those moving there, remember we were forecasting them live as to how it's going to go. This is going to be a very big correction, and then we're expecting it to go down back. Let's see, right? So far, it's doing exactly what we want it to do, every part of the correction. So if you get a flag here, you can look for a buy to break the top, and then you start moving your trade into profit, because from there, it can turn anytime. Bitcoin, good if you thought at this point it was going to fall, right? They're still going up. They broke the top. If you got tagged in that trade, you should have got out of it, especially with the fast move down. Can Bitcoin make one more down? I think so. It's possible. We might be making a B wave here with that complicated one. This could still be the A wave down, or the 1, 2, 3 up, and then you might come back here, but it's still upside. Right? Structurally, that would still be upside. We still expect the upside. It's just a bigger correction as you got it, right? So now if you're going to buy, you're either going to buy above that top, or you're going to buy somewhere from the low going up. Right? I don't see that as the total downside as yet. Right? We still think that that might be something more like this. Come back here and then go. So still look for your trade. Let's see how that works out, right? The bigger structure, still upside. This structure, that impulse and all this correction here, if this comes back here, still upside, at least until we break that up. And then we would relook at the structure to see if there's more upside, or that is a big flat for one more downside. This one actually went nice. It's pulling back, so you probably should be out of it, especially if you're trading it short term. This made a top, so this could likely go back lower. This one made a top there, so we're likely could come back all the way to this level, break the low, and then look for upside. I think we might be looking at a possible running flat in the middle there. Right? This piece. 1, 2, 3. Drop here, you'll get that drop, and then you can look for the upside. So this one would likely retest the low based on what we have right now. This might retest the low. We don't know what this pattern is not confirmed as yet, so we'll just leave it for now, but there's a good chance they will come back and retest the low before they go. All right, but it's going to go up. There's no question of the direction which this is going to go. That impulse is still very much there. So even if you get one more drop here in this, that's a good buy opportunity. Anywhere between these two here, it's a good buy opportunity. LTC. This might just make a bigger correction here. Might just end up with a bigger correction and then upside. Right, it might just correct some more here and then upside. I don't see the downside in that as yet. Still in an uptrend, and they're still making impulse to the upside, right? I think that's about it. We're pretty much way above time. We're like 6 minutes above the 1 hour. Kindly, can you please answer the question? What question? I'm not looking at it. I watch money management webinar. I have one question here. When are we supposed to recalculate position size to next level based on account growth percentage? If it's what you got. Every time you take a new trade. Every time you take a new trade, the percentage is based on what you have in the account. Every single new trade you put on should be recalculated based on what you have in the account. So the percentage you're going to risk in every trade, right? You already knew that factor in advance based on how much you're planning to lose and how much you lost already, right? And then you recalculate what your position size would be now based on how much you're still going to risk the same percentage with, if I get your question correct, right? consistency, pip is money. That's bullshit. That's the simplest answer I'm going to give you. If you don't understand that, it means you really don't understand anything about trading. I can consistently make pip and I can consistently lose money, right? Making pip with 0.1 lot or making pip with 15 standard lots, it's a different story. If I want to make a lot of pip, I could put plenty trades on with 1 standard lot on. You want to see the size of my trades? 15, 10 standard lots. If I want to count pip, all I have to do is every time put on a trade with 1 standard lot and take off 5, 6 pips every time I get it. I would make thousands of pips, but then I'm not going to make money. And when I lost, I can end up losing, like all the trades drop, I can end up losing 50 pips in 10 standard lots on the together, and then it will be like 1 short loss. Guys, I don't know how to explain that. That's go to babypip.com and read up something about pips and all of that, maybe. It's really, really an amateur question. Not that the question is not good, it's a good question, but it's very amateur. If you're that level and you believe that stuff, don't trade live. Right? If you're that level, if that's the level of your trading, don't trade live because you probably don't understand the concept of trading. Right? There is a reason why people like Warren Buffett don't count pips. They don't really look at pips because it doesn't make sense to them, right? There's a reason that pips is only for training purpose. How much has the market moved against you or with you? How much money you're making as a professional trader has nothing to do with pips. So I could be in one trade. Let's take my account. Let me just show you back this very fast because I don't know if you're going to understand this. So this trade has 15 standard lots on, but this trade here has only 5 standard lots. So if this trade make me 50 pips, and this trade make me, if I lose 100 pips here, I will be negative 50 pips, but I will be positive in the money. I hope that makes sense to you, right? I would be positive in the money with 50 pips on 100 pips and 15 standard lots than 100 pip lost on this one. So I can lose pips wise, but my money and my account is growing. Does that make sense to you now? I hope it does because I don't know. I really don't know if you can understand that basic concept. Don't listen to that thing, guys. Anytime, you know who sell that crap? The people who sell you signals. They love to sell you that crap because there is a way that you can make consistent pip winning and you don't even have an account. Most of them don't own an account. They just count pips for you. And there's a way you can do that day in, day out. I told you I had on silver 20,000 plus, and I end up closing it for how much? Around 8,000. It's not because I'm stupid. It's not because I couldn't close it for 20. If I was selling signals, I would close that damn thing about 6 times already. I'll just close a quarter, then another quarter, and then another quarter. And then I'll take the quarter and break it up into 6 pieces and close it small piece. Because every time I close a small piece, I count how much pips I made. It's not how much money I make. It's how much pips I'm making for you. So by the time I get to 20,000, I will take out a couple hundred pips out of it. Maybe a couple thousand pips out of it. Guess what? If you're trading live with money, what happens? You don't do that crap. You really don't do it. You guys have got to learn to question everything you hear out there. If you want to be a serious trader and you want to be a professional trader, you have to question everything you hear somebody says out there. Question everything you hear I say. And I mean question it properly. Do your research. Go do your studies. Do all the homework. Understand what the concept is about. What is based on? What is this guy saying? What is it based on? What is support and resistance? The guy said, hey, I'm using support and resistance for 10 years and it's good for me. I said, show me your account, and he disappeared. Well, why is it good for him? Because he's a signal service seller. He's selling signal service based on support and resistance. So he doesn't want people to disbelieve the concept. He doesn't have an account. I know one guy who trained me on support and resistance. He doesn't own an account until now, and he's still training people. He never owned an account, and he doesn't own one until now. And I'm talking about 5 years ago. He's still training people today, and people are still taking his courses. Well, they will learn the hard way. I paid $5,000 to learn the hard way. I hope that most people could listen to this webinar and don't do that. Don't repeat my mistakes. Don't repeat the mistakes most of you made in here. Most of you must have bought the course already and you didn't use it because it's just a waste of time. Anyway, I hope you understand that, guys. I know sometimes I get very, very thing because I want you traders to be, I want you to learn. I want you to use your brain. I want you to be active. I want you to get knowledge. I don't know how else I can stress it so that you can go and question me and question everybody else when they say something. So you will become better traders. That's the whole point. You will make money because you wouldn't be fooled that easily. If a broker tells you, Hey, you can open an account for $100. Don't ever use that broker. Any broker to allow you to open an account for $100, don't ever use them. They are going to take your $100 and they're going to take a next $1,100 from a million stupid people. That's their calculation. If we can get 100,000 people to give us $100, great. Let's tell them they can become rich by giving us $100. That's their point. You know how I know that? I used to do webinar for a broker in my very, very early days. I was a little naive and I thought these guys really want to help traders. And in the middle of the webinar, that's exactly what I told traders. A question came up and somebody said, can you make money on a small account? And I said, no. Immediately, I got a private message from the owner of the on the station. He said, don't tell them that. I was like, why? I get a private message immediately from him. Don't tell them that. You can't say that. When we finished the webinar, I said, why I can't say that? He said, because we just finished, they just had a competition and the entry level for the competition was $100 that you're going to win $10,000. They had 50,000 plus people entered. You know how many of them won it? Zero. They never even gave out one of the prize because nobody survived with their $100. The idea is that you have to make the $100 positive with a certain amount of trades. And if you try to make that certain amount of trades, you will blow up your $100. You will not get it positive. And that's what happened to all the 50,000 people who joined the competition. So 50,000 by 100, they just pick it up and walk away with it. They know that was going to happen when they decided initially to make the thing like that. And that is why he said you should never say that. So I hope you guys are going to learn something. You will learn eventually. If you want to learn the hard way, that's easy. You can learn the easy way by listening to what other people are telling you and it makes sense. Okay, guys, thanks a lot for coming. I know you guys have spent your time to be here on a Sunday. I want to thank all of you to be here. Help share the videos, please. It will educate somebody out there. There's a new guy out there who is trying to learn for trading and he has no idea how to do that. Before somebody fool him, get this video to him, right? So maybe he will take a whole year, learning stuff and nobody will be able to fool him after the end of a year. He will have enough knowledge to make a decision. Take care, every one of you. Have a good weekend if you still have time. And I will see you next week. Make profit. Thank you very much. Bye-bye.